Cathie Wood just finished selling out of Palantir. This is kind of a big deal because just a few months ago, ARK Invest was holding over $1 billion of Palantir stock, making it their 12th biggest position overall. Not only that, but Palantir was one of just 2 stocks inside all 6 ARK Invest funds. That's actually what made me start researching the company in the first place, and I ended up really liking what I saw. I still do, especially now that Palantir is at a lower market cap than at almost any other point since it went public. That's great, but I think there's a real opportunity here to learn to predict ARK Invest's trading patterns in the future and explain why Cathie Wood may have sold so much Palantir stock today, even at such low prices. Then I'll leave it up to you if you want me to keep covering Palantir or focus more on the stocks that ARK Invest is still buying and holding. Your time is valuable, so let's get right into it. Cathie Wood really started buying Palantir stock in mid-February of 2021, when the market began rotating from growth stocks to value. From February to May, Palantir stock dropped from about $38 down to $19, which is about a 50% drop in price. When that happened, Cathie Wood added around 40% more shares. When Palantir bounced back to around $27 at the end of June, Cathie Wood didn't really sell too many shares for what could have been a nice 50% gain. Since Cathie Wood was accumulating at basically every price, I decided to do a deep dive on the stock in late July. That was perfect timing because just 2 weeks later, Cathie Wood added Palantir stock to all 6 ARK Invest funds at the same time, which is something that can't be said for almost any other stock. Even stocks like Apple and Google and Nvidia, which Cathie Wood treats like cash-like positions, only pop into 1 or 2 funds at a time, even though they have business units in every area of innovation that ARK Invest focuses on. Google, Apple, and Nvidia are all awesome stocks to hold, whether ARK Invest has them in their funds or not. That's why I decided to cover Palantir regularly. According to ARK Invest data, there clearly must be something special about the stock. Well, on September 23rd, Palantir stock was ARK Invest's 12th biggest position overall, with about $1 billion held in total. This is where things get really interesting. Here's what happened inside all 6 ARK Invest funds during that drop. Palantir was added to ARKG, ARKF, ARKQ, and ARKX. In mid-August, Cathie Wood also made big buys in ARKK and ARKW. Over the next 5 months, from the end of September to today, Palantir's stock price dropped from around $28 to $12, a collapse of over 60% marked in the lines in green. In ARKK, where most of Cathie Wood's Palantir holdings were, the amount of shares stayed relatively steady, as Palantir's price continued to drop. ARKG is ARK Invest's second biggest fund by assets under management. The amount of Palantir shares in ARKG stayed relatively flat, suggesting that Cathie Wood was diamond-handing her shares and waiting for the right price. ARKW is ARK Invest's next-generation internet fund, which focuses on themes like AI and big data. So it's the fund where Palantir should be the best fit for thematically, but Cathie Wood was slowly selling Palantir stock out of that fund over time, which is a big red flag. When ARK Invest starts selling a position out of one of the pure play funds that stock belongs in, it must mean that Cathie Wood doesn't think that that is a pure play company in that category. We can see the same type of behavior in ARKF, which should have been the second best thematic fit for Palantir. I called out these red flags a bit in my episode covering ARK Invest's January trades, but the reason I wasn't worried about it was because Cathie Wood was adding Palantir shares to ARKK, ARKQ, and ARKX at the same time. So my thought was that ARK Invest's investment thesis around Palantir was more about computing at the edge, which Cathie Wood has specifically talked about in her interviews. So what's the big lesson here? Either ARK Invest is aggressively buying the dip on a company in the pure play fund that it belongs in, or they're not. When Palantir crashed from $28 per share down to $12, but ARK Invest didn't buy that dip in ARKW, that was a sign that something was up. Knowing what I know now, I probably would have flagged Palantir as a potential cash-like position for ARK Invest anywhere between November and the end of December, when the stock went down to $18 per share, and they simply didn't buy the dip. Now, over the last few trading days, ARK Invest went from having over 30 million shares of Palantir stock to just 2,500, and Palantir went down from being their 17th biggest position overall to basically being their smallest. At the time of this recording, ARK Invest actually has a bigger position in Peloton than Palantir. Yikes. There's no question that ARK Invest has actually lost their conviction in Palantir. The only question now is why, and I think I have the answer, which really has 2 parts. Let's focus on the Palantir part first. ARK Invest comes out with a weekly stock commentary email that talks about any stock that they hold that goes up or down more than 15% in a single trading day that week. In last week's email, they said that Palantir has reported a significant deceleration in growth in their larger government division, suggesting perhaps a change in government procurement behavior. If we look at Palantir's latest earnings presentation, we can see that government revenue grew by 76% year over year in quarter 1 of 2021, but in quarter 4 it only grew by 26%. My explanation for this is because the government fiscal year starts on October 1st. That's when government agencies get their new budget, which means they have to figure out and allocate that budget internally. Then, once they know their numbers, they can go out and negotiate contracts accordingly. Those contracts take time to renegotiate and sign. It doesn't sound crazy for all of those things together, from the moment the new budget arrives to the final signatures on Palantir's government contracts, to take more than 90 days combined. If that's the case, those contracts would fall into Q1 for Palantir, which means more government agencies are actually spending more budget with Palantir earlier in their fiscal year, now that Palantir has proven its worth. That said, Palantir's government customer count has stayed flat year over year, so Palantir didn't acquire any net new customers on the government side. What we do know for sure is that Palantir's government customers are spending 46% more money with them year over year. But did they lose a couple small customers and add a couple bigger ones, or did they lose a couple big customers and add a couple smaller ones? Another factor that we have to talk about is Palantir's stock-based compensation, and how they're constantly diluting shareholders. Since the beginning of 2021, Palantir has increased their shares outstanding by well over 10%, from 1.8 billion shares outstanding to over 2 billion. That means that each share of Palantir we hold becomes a smaller and smaller chunk of the company over time, and so Palantir's market cap has to grow by that same amount just for shareholders to break even. Compare that to a huge artificial intelligence company like Google, which is actively buying back its shares as its market cap continues to grow. When you compare those two stocks, the opportunity cost of holding Palantir starts to look pretty high. Again, just because ARK Invest doesn't hold Google doesn't mean it isn't a great company. Here's where the second part of the answer comes in. In today's macro environment of supply chain issues, high inflation, high interest rates, and low customer sentiment, all growth stock prices have been hit very hard, including the ones that ARK Invest always had higher conviction in than Palantir. In this kind of environment, any negative piece of information in a growth company's earnings call means its share price gets slashed by 20%, 30%, or even more. That's exactly what happened to Shopify and Roku, which are positions that ARK Invest has been buying up at the same time that they've been selling Palantir. Now the opportunity cost of holding Palantir looks especially high to ARK Invest because a dollar locked in Palantir is a dollar that wouldn't be going to Shopify or Roku after these additional 20% discounts. What we need to realize here is that ARK Invest has very different investing goals than us retail investors. I'm not talking about the 5-year time horizon or sticking to certain innovation themes. I mean that Cathie Wood has to manage a set of portfolios as real financial products. ARK Invest cares about other things beyond price action, like how their portfolios correlate to the indices over time, not holding a lot of cash, having to think about the total number of stocks in each portfolio, and justify a dollar spent on one stock over the others. All these little factors add up to pretty big differences in how Cathie Wood behaves versus how us buy and hold retail investors invest for ourselves. Speaking of which, it's probably worth pointing out that Cathie Wood isn't sitting at some desk with a bunch of spreadsheets trying to figure out all of this stuff stock by stock. I'm pretty sure that ARK Invest has a system for evaluating the stocks they hold, given all of their 5-year price targets and assumed multiples and other financial metrics, not just individual stock performance, but how these stocks compare to each other. So when big macro forces like the pandemic, interest rates, or the Russia-Ukraine conflict push everything down in general, ARK Invest can probably see which specific stocks got pushed down more than they should have been. If one of their highest conviction stocks, like a Roku or a Shopify, got pushed down way more than other stocks on average, it makes sense for them to raise cash and take advantage of the deal, even if the cash-like position is sold at a loss. The assumption here is that the future gains of the stock that they just bought will exceed the present losses that they just realized to buy them. Emphasis on the word assumption. I think one thing that I can be doing better is mention these differences between ARK Invest and the average individual investor more often. The way we should be using ARK Invest's trading data is to narrow down our search for innovative companies. The way we should be using their research is to understand how certain advanced technologies are evolving and the market opportunities that could exist as a result. Then we should follow up on that ourselves, check our other sources, even ones that are bearish on those same technologies. Look at similar stocks that ARK Invest doesn't hold or really talk about. What we shouldn't do is blindly mirror some of Cathie Wood's trades without understanding the big picture and inner workings of their funds, including things like cash-like positions. I first started researching Palantir because of ARK Invest, but it's a top 5 position in my own portfolio because of my due diligence and my decisions. And again, ARK Invest uses some of the best companies on the planet as cash-like positions: Google and Apple and Nvidia. It's not such a bad thing for Palantir to fall into that camp. One thing I think that ARK Invest can do that would add a lot of value is be a lot more open and specific about some of these big changes to their holdings. They already do this sometimes. For example, in a previous episode of her monthly In the Know series, Cathie Wood explained her thoughts on Illumina, which was a top 10 holding in ARKK and ARKG back in 2020 before getting sold out of those funds entirely. ARK Invest analysts also write articles over on their website as well as Medium.com, where they talk a lot about individual companies. Also, like I showed you earlier, they send out emails whenever a stock makes a big move up or down. So I think it would be awesome if they could come out with content explaining what they see in a company when they make massive purchases in it, especially during an IPO, like with Robinhood. I also think it would be awesome if they came out with content explaining when they sell a massive position, like Illumina or Palantir. Those two types of content would really be a big value add. Comment below with your thoughts on Palantir, now that ARK Invest has sold out of it. Do I keep covering it since it's a stock that I personally believe in? Or do I no longer cover it because I tend to focus on ARK Invest's research and trading data? I want to make sure that I'm adding value in the right ways here. Speaking of adding value, if this episode helped you understand a little more about ARK Invest's trading patterns in general and their Palantir holdings specifically, consider liking this video and subscribing to the channel with all notifications turned on. That's a great way to invest in the channel that invests in you. And if you'd like to learn why I'm so confident in Palantir and why it's a top 5 holding in my public portfolio, this playlist right here has all the answers. Or if you've been wanting to learn more about the future of artificial intelligence and some other great stocks in the industry, this episode here is for you. Either way, stay long, stay strong, and thanks for watching. Until next time, this is ticker symbol U. My name is Alex, reminding you that the best investment you can make is in you.